Good afternoon, everyone. My name is Patrick Hawe. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial conditions. Position disclosure, no new swing positions, as we had a very, very choppy day ahead of the August payrolls number, which is due to come out tomorrow morning at 8:30. Couple earnings coming out. I'm guessing Avgo comes out at 4:15. I don't see that out yet. Nice to see this path up though on earnings. Nice to see them with expanding their buyback by 500 million. They really needed that. I don't know if it ran out this past quarter. I know they had a buyback before, and I remember liking them because they had this buyback when they were up in here, and that seemed to have given it a nice bid. And then they had this atrocious disaster earnings report that was a few earnings. Yeah, so it must have run out there because I remember they had a nice bid going for it, and that was helping it out. Then they had this disastrous earnings report that just absolutely destroyed the stock. It was like one of the biggest earnings moves I feel like I've ever seen there. So nice to see this name up on numbers. Nice to see them with a little bit of a buyback too. Yeah, we'll see if this helps put a floor in this name. If it does, definitely might be worth watching over this next quarter or so. And then DocuSign is out. DocuSign, this name's a struggle. People talk about this being a potential takeover target. I definitely could see that. That makes sense. It might be too expensive for that still, though. DocuSign, those numbers look okay. Those numbers look fine. Kind of surprised to see it down on that. And the path numbers look pretty good. Not blowout. This buyback's definitely helping it out a bit, but decent path numbers. Avgo, I think, is coming out at 415 here, so I believe 415. It's 415 now. Yep, Avgo is out, trading up initially. See if I see any numbers for this yet. Avgo revenue 13.1 billion versus 12.9 billion estimated. Ooh, just flashed right back down there. Avgo. Rev looks like a B. EPS a B. That ticked up initially. Something just hit that back down though pretty hard. And there it is, missing on guidance. Sees Q4 rev about 14 billion, estimated 14.1 billion. Not a huge miss, but it's a pretty sensitive market out there with this economy seeming to start to slow down. Can't be missing on guidance. So initial uptick for Avgo, Broadcom, but smacked right back down there. Starting to recover a little bit. Applied downside 145-ish. Looks like 145 is that exact low there. That's why those measure moves are so important to keep track of. I don't know what path. I forgot to look at what path was pricing in. I assume it was a kind of a lot. But a couple of those names to pay attention to for tomorrow. Tomorrow morning, big lots. I think they're going bankrupt though, so I don't know if they have any earnings to report. Pretty sure that they're going bankrupt. But it's also a super shorted name, so I guess you never know what could happen with that. So we'll see. Integration of VMware is driving. Yeah, I mean those Avgo's not terrible. Just I guess wasn't good enough for what this market needs these days. Needs absolute perfection, as we saw after those NVIDIA earnings that definitely weren't bad, but just weren't the perfect NVIDIA earnings that we've all been so accustomed to getting these days. Anyway, so yeah, super choppy day today. Pretty back and forth throughout the trading session. Um, we do often get that type of action ahead of like the quote unquote biggest event of the week, which tomorrow is the jobs number, the payroll number. So we had jolts yesterday. That's job openings. Tomorrow is payrolls. The if you had to pick which is more important, it's usually the payrolls number is more important. So we'll see how those look tomorrow. We had some data come out today. So we had ADP early in the morning at 8:15. ADP, that's private. Was a decent miss. 145,000 was expected. We got 99,000. And then we had initial jobless claims. That was a slight beat, fairly in line, but 227,000 versus 230,000 estimated. So that's contradicting the number from 8:15 as well as the earlier numbers that we've seen. Pretty much every number's been a miss in a bad way, and so far we've been seeing bad news is bad. And it seemed like today we were seeing good news is good, but then the market kind of just went into its own little universe. So 8:15 this morning, ADP hits right here on this candle. We tick down from that. 8:30 weekly unemployment claims hit. We rip right back up on that, and we hold a nice bid into the open off that weekly number beating, which makes you think again. Good news is good, bad news is bad, and that was exactly what we saw off those numbers. I see your comment there, Mike. I'll read that in a second. But yeah, so bad news has been bad pretty much all week, and that's all we've really been seeing. And then that weekly unemployment was quote unquote good news, and market really seemed to like it. So we got bid up off of that into the open. Off the open, market had a pretty nice bid to it and was holding steady, a little bit shaky here. But I remember after this shakedown and then pivot back up to new highs, I remember being solidly impressed with how well things were trading. And I'll go over the names we were looking at in a minute here. But it seems like we were going to hold a bid and either be a bit choppy or at least steady into the number tomorrow. And then coming into tomorrow's number, we'd be a bit neutral or so. And that totally fell apart here. In the second half of the morning, and that's what the VIX, rallying back decently, but the market really seemed weaker than the VIX was strong today. Sometimes that's a signal for the other way. Sometimes it's just noise that you gotta kind of ignore. And although the VIX wasn't too strong, quote unquote, today, the VIX is trading with a 20 handle. It's not like we're down under 14 or anything like that. So that's something to keep in mind as well. But I thought today was pretty tricky. Again, strong open. It seemed like we had a really good bid going. And then UVIXI found a low in downside extension, right? It's not like this got to, a real support level. It basically tested yesterday's low. Found a low, bear flagged a little in downside extension, broke that bear flag up, and then just totally reversed back to highs. Didn't break yesterday's high or anything like that, but it was enough for us to certainly break yesterday's low in the SPY, and SPY got hit hard here. So we went from a strong market that seemed like we were trading pretty bullishly to a super weak market that seemed like we were definitely going to fall apart here. Again, rolled all the way over, broke yesterday's low, bear flagged for quite a while, tried to fail, we tried to break this bear flag down, and then it was pretty much a strong market, reversal down to lows, weak market, and then the rest of the day was just choppy false signals in both directions, which can be hard to trade if you're trading around a core position in something. That can definitely be good for you, just kind of going all over the place, back and forth with no real follow through at all. But if you're looking for new stuff, it can be tricky, and this whole week has been tricky. I'll be the first to admit that for sure. But so we bear flagged here after rolling over completely. Um, Poked the low here, traded back up through the 5 minute ADMA, hit back down from equilibrium, poked a new low, traded that back up. Couldn't really continue up. We were wedging out. I'm sure we were a little extended on the 15 minute during this time frame too. Um, that gets hit back down. This looks like, all right, we had a couple false breaks here, but that was in 15-minute extension. Over here, this should be a little bit more real now that that 15-minute ADMA is caught up. Break down, immediately negate that, shoot up. Then bulls are looking a little bit better again. We're sort of bull flagging here on the 5 minute chart. We get past the 15-minute ADMA at this point, and then over here in the second half of this flag, the 15-minute ADMA actually catches back up to that flag, saying, okay, we're sideways for a little bit, now we should push up. We push up, make a new high here, break these highs. That is immediately negated back down. We then lose 550, flush 550 to 548, negate that flush, then negate that negation, and end the day just kind of right in the middle of all this chop here. So strong first half of the morning, super weak second half of the morning, and then second half of the day just chop and false breaks and false starts in both directions everywhere you go. So super tricky second half of the day today. Again, though, that is in front of the payrolls number tomorrow. And I'll just read Mike's comments here, which I read it out of the corner of my eye and agree with him. So payroll number, Mike's saying payroll number more important because inflation number can always be rationalized. Commentators be like, including all items that we measure, inflation is basically 0%. Yeah, for sure. I mean, it's a little bit more, I guess, active of a number versus the job openings, a little bit less active. But overall, we've been, I hate to talk about the same stuff every day, but it's because it's leading up to this Friday number, which is super important. But the Fed is definitely paying more attention to the economy and our jobs numbers than they are inflation. Not to say they're not paying attention to both. Obviously, they are. But the theme at this point, again, has gone from inflation to, okay, the economy is going well, let's see how long we can press this, to, okay, we should start to cut rates soon. And now it's to the point where it's, okay, we definitely need to cut rates. Let's hope the Fed doesn't, take their sweet time, take too long, or don't act hard enough, because the data is starting to show that things are slowing down. For the most part, we've missed almost every data point this week. We had a couple beats here and there, but if you took like the average of all the numbers, most of them were misses this week. So yeah, SPY closed under 550. A weak close. And yesterday too, we were saying how we had the rest day, so we could break down today. It might not be a huge breakdown ahead of the number. That's kind of what we saw. We lost 550 and then reclaimed and lost 550 a few more times after that. But can't really say that's a good close. SPY definitely looks dangerous still. And now with a day that we sort of broke down, sort of were weak, but sort of held into, it's just another day for that daily ADMA to further catch up, or should I say catch down to the highs from today and yesterday, which potentially opens the door to pushing us lower. But of course, this number can definitely influence that tomorrow. But the SPY really not looking too good there. Bears are definitely in control still. It's pretty much, I think, what I titled the video on YouTube for today, Bears in Control ahead of payrolls. Qs, 2 sideways days in a row, didn't really break down today, but can't really say they were super strong either. 2 daily candles with 2 upper tails with the ADMA slope down, crossing below the 21. That ADMA should be down to, if not more than today's high. That's not a good, it's a good setup for the bears. Not a good setup for the bulls. That's a bearish looking setup for the Qs. 4, 5, 8 is your downside trigger tomorrow. hopefully, we don't gap down and just like flash through it at 8:30 because that could be a decent short setup. But SPY looking dangerous, Q's looking dangerous. IWM doesn't look good. It rarely looks good these days, but IWM not looking too good. And the Dow looks the best. I wouldn't say that looks good, but it's not quite broken yet, like the others sort of are. But overall, bears are in control still. There's a few reasons for that. Again, there's a bunch of news reasons for that. Also, technically speaking, bears are definitely in control at this point. They can lose that, and more often than not in the market these days, the bears lose control pretty fast. That could happen tomorrow. Although someone had asked the question in the afternoon meeting yesterday, and I'll just re-say my answer. The results for tomorrow's number are going to be interesting because bad news has been bad news. Whereas, a couple months ago, bad news was good news because bad news means bring on the rate cuts. Now bad news is saying, okay, well, things are slowing down, but we're not really getting these rate cuts yet, so things might fall apart. That starts to worry some people. But if the number's good and strong tomorrow and, we got plenty of payrolls and everyone's working too hard and making too much money and everything like that, that doesn't help Powell's case for a 50 basis point cut. That doesn't help the case that the Fed should start to be worried and be cutting rates and stuff like that. So I still am not quite I don't want to say we're going to go down either way because that probably isn't true and doesn't necessarily make sense, but I could see us going down on a bad number because, again, bad news has been bad news. But I could also see I could see the argument of case for going down on a good number too. Because again, that doesn't help the rate cut case, right? And an inline number, today's action will probably be a good preview of what the action tomorrow will be like if we just get like a perfectly inline number. But overall, bears are in control. I guess that's the main theme that I'd want to get across here. We're holding in a bit. We're holding on by a thread, if anything, which we were definitely holding on by a thread down at lows, down like SPY 548 today. But bears are in control. This VIX daily chart is definitely not breaking down yet. It's not losing the strength that it started to gain from Tuesday. So that had a rest day yesterday. It had a little bit more of a bearish day today, but a bearish day within a bull flag does not make for a bearish chart, right? So yesterday it looked like we could open the door to lower on the S&P. It still looks like that's the case. I don't think after yesterday's candle the case was a door opening for a strong VIX day, but I think that is the case after today. This VIX does look like it could spring back higher tomorrow if certain events trigger that. So yeah, we'll see how that number looks tomorrow. Hard to give too much else other than that because, again, that number could change things. Tomorrow is September 6th. Do we have anything else besides that? No, it's just mostly those jobs numbers. There's like average hourly earnings and stuff like that. Non-farm employment change, unemployment rate. That all comes out at the same time at 8:30. So yeah, bears in control. Market's looking vulnerable and dangerous. That does not mean that we're definitely going to go straight down and we have to break down, but it looks certainly possible. So be wary of that. Bears are in control. And just as far as names that we traded this morning, kind of the same. It's been kind of the same thing every day. We've had some names that are working okay, but they're not really sticking with the strength throughout the day. Today was the only day I didn't have Tesla on the list because it went yesterday, but Tesla had a nice day 2 today, and this Tesla held its bid this afternoon pretty well. Amazon was the best winner from the list today. looked at Amazon either versus 174 or through 176. That triggered pretty much right away. And all of the strength that Amazon, I mean, Amazon also kept its bid. This Amazon had a positive initiation with a decent price target. I think it was like 220 or 230 price target. That trade happened and was done within the first hour of the day or so, and then Amazon kind of just spent the rest of the day chopping around a bit. But Amazon probably the best winner of the day. DraftKings probably the second. Maybe the way this finished, DraftKings could have been the first. But been talking about this DraftKings chart, the way it's been holding this like 33.80, 34 area. Been watching this 35 breakout. The chart's been improving a bit, and now we got football coming back online. First game tonight, right? So just kind of been stalking this and watching this throughout the weekend. Today it actually worked and went pretty well. Yesterday was kind of like a bottoming out day one, and then today was the better day for it. But Amazon and DraftKings, the two main winners from the list today. And I mean, nothing else too great, really. We looked at PayPal 73, but that failed pretty hard and early, so I don't think anyone really got too hurt on that. Roku, we're looking at 66. That was another one. I mean, that trade worked, but it was done within the first 30 minutes, and then it just chopped the rest of the day. Roku had an upgrade this morning. That's why we were looking at that. JetBlue is pretty cheap. Don't really care about that. AMD, another choppy mess. AMD a little bit similar to the Qs, kind of holding in, but two upper tails, downward sloping EMA below its 21 EMA. AMD looks a bit dangerous as well. NVIDIA was a little too extended. Still extended, but had a restful inside bearish day today, so NVIDIA can definitely go down tomorrow as well if events trigger that. And yeah, bears in control. We'll see how hard people are working, or at least if they're working tomorrow morning. See what that number looks like, and go from there. And I think that's all I got. So happy to take a look at any questions anyone has or anything of that nature. Let me pull up YouTube real quick. All right, let's see here. Yeah, what are we expecting for payrolls tomorrow? Let's see. Looks like 165. 165 is what we're expecting for tomorrow. That's what I'm seeing. First question I'm seeing from Joshua was semis down. There's a better chance the downside with the numbers. Don't I think so? I mean, I wouldn't necessarily say it's because semis are down. Semis are, I mean, this market, bears are in control. This is a bearish market that we're trading in. I know we're not in a bear market or anything like that, but it's a bearish market that started on Tuesday that we're now trading in. Yeah, exactly. I was just pretty much just about to say what you just typed in there. If the number or the reaction to the number is strong in a bullish way, you best believe that those semis are probably going to be the leaders to the upside, right? They're higher beta, they move, they're market favorites. Possibly a little bit overweight in some of these funds, and people might own a little bit too much of them. It's definitely a possibility, and if anything, a probability. But I would not be surprised to see like NVIDIA in the semis. You know, if the Qs are up 1%, semis are going to be up 1.5, 2%, something like that. But yes, for sure. and these semis are not oversold. They definitely have room lower. So yeah, definitely agree with you, Joshua. But it's tricky with the number. It's tricky with the number. We're subject to the number, but still, it's not looking good. I don't want to say I'm nervous that we're gonna break down because I don't really care if we break down or break up. If we break down, we can short things, but it doesn't look or feel good out there. Not that we should be trading on feelings. I certainly never do that, but you know what I mean? It just doesn't really feel too good out there. But we'll see tomorrow morning for sure. Jumping over to YouTube. What's up, Surreal? Thoughts on AI and SMCI? So AI reported big gap down, but they bought it back up today. If you're tracking this, you probably know the report better than myself. With that being said, this low I forget exactly what this gap down was from, but it reclaimed this 21, pretty much closed right at it here. I mean, with earnings names trade kind of in their own universe. They certainly are market correlated to a certain degree, but usually they trade within their own universe. Usually what I like to do with earnings names is you don't want to have a bias, but if you want to have some sort of game plan where, like, if AI is gapping down on earnings, but you think it's overdone and you're leaning towards the long side, I think that's I'd rather you have some type of lean than just, who cares where it goes. Because that way you have a little bit more confidence when you're taking the trade. But so usually what I like to do with earnings names is let the opening range determine what I'm going to do with it. And usually I'll have a bias. So like if you like this AI, it's gapping down today, you think it's overdone and you want to go long it, don't just blindly buy it like off the open or anything like that. But usually it depends on the name, but usually I'll give names like 2 to 5, maybe sometimes 15 minutes or so. Let it have its opening range, let it wash out the opening volume, opening imbalances and everything like that. And then you have a low and a high to trade against. So I mean, this AI, it opens a little bit of a flash down, but decent initial bar, breaks that bar higher. So you're gapping down. This is price correcting to the 5-minute ADMA. A little bit of a bull flag here, but overall, after you see this bar here, and then you see this, I think you can say to yourself, you can try to build into AI to the long side. If this was going to be an absolute disaster, like Dollar Tree to the downside, this Dollar Tree, and as much as gaps matter, they definitely don't matter as much on earnings, right? So like this Dollar Tree gap down huge, but look what this did on the open. It opened a little bit of volatility and then just sold and flushed lower. So just because something's gapping down a lot doesn't mean it can't sell off and gap down more, especially on earnings. So with AI today, it was a little bit of the opposite. You were getting bought up right off the open. I'm not going to be Captain Hindsight here and tell you exactly every point that you could have bought this throughout the day at. But that's typically what I do on those earnings names. Let that opening volatility and washout happen. And then you have a high or a low to play against. And you usually, not always, of course, but earnings days are usually a bit better with those intraday trends. Like, you're usually not going to have a post-earnings day, go through the high and then have an initial low and then break that initial low and then break that prior high and then break that prior low. That's usually not going to happen unless maybe they report in the morning and then they have like a conference call going on during the market hour. But usually the big money, whoever's going to control the flow throughout the day, they're going to do some real buying or some real selling, but it's not going to be like a huge battle. It's usually one or the other. Dollar Tree was an example to the other side, right? This had a high, sold off, and while it feels like you're chasing the short down here, you still get paid on that. While you're not buying the low in AI in this consolidation, you can still get paid on that. So that's generally what I'm doing on earnings is, and again, I don't have a super good like fundamental analysis for you on this AI earnings report. Um, but that opened, had a decent opening candle, got bought up initially. This low probably shouldn't break at that point. Sometimes they do, but usually those initial highs and lows are pretty good outs or spots to play against for earnings names. Um, so yeah, SMCI, and then I guess just to add to that AI, and I mean, if you really like this AI name, I don't want to say to play it versus 20 because it's too obvious of a level for me. You could either play it versus today's low or to be a little tighter. I think you could play some versus 2050. There's no way this should be getting below 19 though. Definitely not impossible for that to happen, but if you like it long, this should not be getting below 19. If you like it short, call it 24. If you like it short, it shouldn't be getting over 24. So that doesn't mean short here versus 24, but maybe that gets bought up another day or two into the 22 area and then pivots back down and stays in this bigger picture downtrend. So yeah, that's what I got for you on AI. And then SMCI. SMCI. Oh man, this chart's starting to fall apart. Yikes. SMCI. SMCI is kind of shot if it gets below 350. It's a little downside extended if we have a good number tomorrow and these semis do get bid up. This could definitely see 450 pretty quickly. I don't have much for you on this though. This name is pretty messy. And there's a lot of drama in this name with the short reports. And this chart's pretty broken. But it's also a pretty thin and volatile name, so this looks pretty ugly. Could something good come out on it? This is back at 550, 600 quickly for sure. I'd say, but I don't have much more for you on that. That SMCI is really messy, and there's a lot of drama in that name. I don't want to say stay away, but I'd be a bit careful there on either direction. What's up, Alan? More of a general trading question. And Ting says 30% less risk. What are your thoughts on finding this balance? My style is closer to swing trading than day trading, but normally enter today, exit tomorrow time frames. So I don't know how, if you're like new to trading or not so new to trading, that can depend a little bit. Usually what I tell like newer traders is find something that you like, find something that's working for you and stick with it and learn to master that. And even if that setup that you like and are learning to master only comes once a week, that's fine, because you can still, usually more or less, if you're trading right, you can pretty much infinitely scale that up. Um, so if you like the shorter term swing trades more than just pure day trading, then stick with that. You don't have to do both. Um, you know, I always like to say, if one guy makes one trade a week and makes $500, and the other guy makes 10 trades in that week and makes $300, the guy that made $500 is kind of a better trader, even though the other guy is trading more and is more active and everything like that, right? At the end of the day, it's kind of about money. I mean, that's why we're here. Although this is fun and I like you guys and I like to have fun, but obviously we're here to make money. So whatever, I mean, you got to go back and study your trading. You got to make sure you're having good risk reward setups. Don't be risking $1 to make $1, or risk $1 to make 2, 3, 4, 5, 10, stuff like that. But in general, if it sounds like you kind of got a, and I don't know exactly what technical setups you're looking at or how you're executing these trades or anything, but if you got something that's working for you or you're more comfortable with that, then just keep looking for that. They always say, they do like the comparison to being a surfer and waiting for that perfect wave. Don't bleed yourself out or bog yourself down or burn yourself out trying to do more random, not random trades, but trades that you don't really like or aren't as good at. Eventually you can start to branch out, but if you got something that's working well, then stick with that. So like, you're asking about finding the balance. I don't think you need to find the balance, really. I think you just need to be good at what you're good at, and it's usually easier to improve that than improve something that's been harder for you, if that makes sense. Just rereading your question here. I mean, the more like, it's definitely more of a little bit more of an experience thing to take higher conviction trades and risk more to make more. But that is eventually what you kind of got to do. And then like the day trade, cute extension stuff, those are more to, pay the daily bills, as opposed to make your month off of like every single day you're taking those trades. Because you're going to get blown out one time doing that. I guarantee that. Thoughts and feelings? Too selective. I think, I don't know. I don't think you need anything else, really. It's better. It's better to be too selective. It's better, and maybe I'm wrong on this, but I always say it's better to miss a trade than it is to lose on a trade. Um, Being more selective and trading less and having better conviction when you are actually trading is a good thing. I don't think that's a bad thing. It's something I've improved on over the few recent years or so, and it's been better for me. I'll tell you that. I'm not as stressed throughout the day. I'm not burnt out every single day. I mean, sometimes I am. But I'm not. I'm definitely frustrated a lot less, and that helps me take trades when they are setting up for me, as opposed to trying to do more and trying to do like everything, and then I'm so frustrated by the middle of the day that I'm like, whatever, I'm done. And then a trade sets up, and I know I probably should be taking that trade, but I don't because I'm frustrated. And then it works, and I get even more frustrated. So being too selective, I don't think is bad. I mean, you got to trade eventually. You got to take risk to make reward. This business, inherently, you have to be taking risk. There's no real riskless trades out there. But yeah, I don't think you really need anything else. I mean, whatever you got going on that is starting to work for you, just keep focusing on that. Keep being selective with that. who cares if you're surrounded by people that are being more active? And they're so active and they're making so much money and they're never losing. I would bet you that they are lying. It's really not that simple. And there's some people out there that are like that. But yeah, just focus on yourself. Don't worry about what anyone else is doing. If you're doing something over and over, if you're trying this one trade over and over and it's not working and you just keep losing money, stop doing that. If you keep touching the stove and the stove's hot and you keep burning yourself, stop touching the stove. But if you got something that's working, again, if your risk reward it's just math. If your risk reward is 1 to 3 and it works 50% of the time, you're going to make money in the long run and you can scale that up infinitely. So as long as that's all starting to come together, just keep focusing on that. Don't start to get a little bit good at something and then try to branch out too much. Just focus on one thing and master that. And then after that, you can start to branch out and do a bit more, but still at least you have something mastered in your back pocket that you can go to. So I hope that helps a little, makes sense, Alan. If we buy bullish setup and get short squeeze, and the bears are, oh yep, for sure. Yeah, that's a big thing, Mike, for sure. Mike's talking about, for those on the YouTube, big thing for him is only, and a swing trade's different, obviously. If you got like a fundamental swing trade on, you're trading around a core, that's different. But like for day trading, for active trading, only trading things that are in play, whether it's news or earnings or an upgrade or something like that. And I know you're mentioning XLE here. Sometimes XLE is in play with some oil news or Middle Eastern news or something like that. But only trading things that are in play is another big one. That's like a top 10 golden rule for new traders. If something, just because the daily chart looks good, if the name is not in play at all and it's not like an active name, don't over focus on it. You're going to miss the better opportunities. So yeah, trading things that are only in play definitely helps. Definitely something that I had to end up doing, and it's helpful for me, that's for sure. CRM. Yeah, weird dark pool print after hours. Alright, looks like I got through everything. Just double checking. Yeah, looks like I got through everything. So alright, jobs number, payrolls number tomorrow. Bears are in control. Market is looking dangerous. That number tomorrow morning can change that a bit, but I'm probably leaning more towards the short button than the buy button tomorrow. We'll see what the number looks like, though. We are expecting, I think I said 165. Yeah, 165K, 165,000 is what we're expecting for the number tomorrow out at 8:30 in the morning. So be there, be ready. Don't be surprised if we are weak. Just because we're looking bad doesn't mean we have to break down, but it's not looking or feeling too good. But when a failed move comes a fast move. We saw that on Tuesday where our daily bull flag range broke down. Could be the same thing to the opposite side where we should and are about to break down, and then we shoot up, and that could trigger a squeeze too. You never know, right? So be ready for anything, but Bears are in control. Payrolls number 8:30 tomorrow morning. We will see you all there. Otherwise, have a good night. See you guys tomorrow morning.